morning, everybody. Patrick MontesDeOca here once again with the Equity Management Academy update. I want to take a minute here to review the gold and silver markets, as well as the ETF, XXX, Velocity, USLV for the silver market. And on the page below here, what you see is basically a report that we publish every week for our subscribers of the Equity Management Academy. Click on login, it will take you to your members area, and click on the weekly Futures Gold and Silver report. This report is the Future Swings Gold and Silver report for the gold and the silver market. This report was published on January the 23rd, 2014. That was last Saturday, based on Friday's close in the gold and the silver market. And what this does is it gives you the swing trading instructions or ranges for the following week. In this case, this week. So I want to take a look at and see what basically has transpired since the report was published and what we can expect to develop here as we continue with the gold and the silver markets. The gold market, in last Friday closed at 1294, and with the market closing below the 9-day moving average of 1218, it gave you a confirmation that the weekly trend momentum was bearish, and that the other side of the coin was that if it closed above the 1218 level, it would negate the weekly bearish short-term trend to neutral. So as of Friday, the technical picture was bearish, being that the market closed below the moving average that we're using. The weekly momentum indicator, which is the VC price momentum indicator, the algorithm that essentially we use to trade in the room, of 1292 confirmed that the price momentum is bullish, simply because the market closed about 1292. It closed on Friday at 1294. So it was bullish, but it told you that if it closed below 1292, that it would negate this bullishness, and that the bullish signal would become neutral. And so if you take a look at the gold market, basically, we're monitoring the room right now, and if we take a look at the daily chart, let me just eliminate the drawings for the time being so we can see clearly the chart. This was the close of last Friday, and the market has made a low today of 1258, and so it has reached the target, or towards the target, of 1255. It's trading last at 1260, so it has triggered the buy signal at 1274, and it's about to trigger the buy signal if it touches 1255. The signal is saying that because it closed below 1292, which was on the 26th, it closed at 1281, that the targets of 1274 and 1255 could be met. The 1274 target was met on the 27th, and it picked up the buy signal at 1274. The low was 1272. And now we're very close to picking up the second signal at 1255, where it's indicating basically to cover your short positions and go long at these levels. So for the weekly, it looks like the VC weekly price momentum indicator is going long, unless the market closed below 1255. So 1255 should be your weekly stop. If the market closed below 1255, I would suggest that you can hedge your position at that point. I personally do not recommend, in terms of trading myself, to go short. As my own trading coach, I am using basically these corrections that you see here into these levels to add to my long-term position, as the market definitely has defined what appears to be a bull market developing since we made the law of 1130 back on November the 7th. And you can see the formation of the waves here very nicely, moving up into this uptrend pattern that seems to be basically moving up to higher levels of resistance that point to about 1350 on the upside. If we just connect the trend lines on this pattern here, we could see that there is some kind of channel that seems to be developing. If we use the trend lines to identify the different levels of support, or better yet, if we use the fan line from the low of 1130 and a half to the recent high, the Fibonacci fan lines give me a much closer look at where the support levels are that we can expect the market to hold. And if you look at the bottom of the range since 1130, this trend lines served as support after the low was made, where it told you the market can come down to, as it did here in December, the middle of December sometime, into this little bit of a correction into this levels of support, or fan line support, Fibonacci fan line support, trend line support, that basically confirmed a very strong level of buying took place at this level of support and broke out into what appears to be reaching short-term resistance. Taking a little bit of a breather back into the trend line support, I believe will complete this pattern that looks like a little bit of a fourth wave correction in implementing a little bit of wave count. One, this is wave one. Two, three, and excuse me, we are in the process of what appears to be completing wave four. So I believe that these levels are going to hold in the gold market, and I think there's a great deal of demand now that seems to be coming in here as a basically a risk asset, as some people may call it, as a consequence of the situation that seems to be deteriorating day by day in the Eurozone, and basically the global markets that are in a state of chaos, not to mention political turmoil, geopolitical turmoil. But let's come back here to the market and what it's telling us, which I always try to do, is to allow the market to tell us what it wants to do based on the price action, and for us to make an educated guess in using these algorithms to identify when those levels would be the highest probability levels for us to enter the market. And so if we bring back the the algorithms here that we're using for the short term, it also has identified for us where, basically this daily algorithms are. In using the weekly numbers, you're looking at basically the weekly algorithms right here at these levels, and are indicating that we are in a major level of support. So the daily algorithms that you see here are extremely overdone, oversold, and have come down basically into the weekly level of support that is synchronizing itself with all the other indicators that tell me that there's a very high probability that the gold market is making some kind of a bottom at these levels in the VC indicator price of 1274 to 1255. Use the 1255 as your stop if you want to hedge your position, at your own risk. If you wanted to go short, good luck to you, but we are suggesting to use this correction in the metals basically to add to your position. And we're looking at an area of between 1255 and 1240 basically as an area where I believe is offering tremendous values. Let's take a look at the silver market and see what it has done in relation to using these codes. And I want to take a look at on the chart on the right here, we have the USLV, and this chart here is the silver chart. And let me just set the chart up here a minute so we can see much more clearly the daily prices, or what has transpired since we published the report last week. And on last Friday, the silver market closed at 1833, and the market closing above the 9-day moving average of 1659. It confirmed that the weekly trend momentum is still bullish, and as long as it stays above 1659, it's going to be bullish. But if it does close below 1659, this bullish trend would be negated to neutral. So that's an indicator to watch. With the weekly momentum indicator, which is the algorithm that we use, of 1815, it confirms that the price momentum is bullish as well. But if it closed below 1815, that this bullish signal would be negated to neutral. The weekly price indicator code told us that if it does close below 1815, to cover your shorts at 1781 to 1728, and use the 1728 level as your weekly stop level. So this is the close of last Friday. The market obviously closing let me take a look at it in here. On 126, it closed at 1793. It closed below the 1815 level, so it triggered a bearish signal that indicated that it could come down to that 1781 to 1728 level. We're trading at 1699, 17 right now, and so we are below the 1728, and it has picked up a buy at 1781 and a buy at 1728. These are buy 1 and buy 2 weekly levels, indicating to reverse and go long. And if you go long, to use the 1728 level as your stop close only. And so the market has come down into basically the weekly levels that are the highest probability levels to enter and add to your position in the market using the weekly swing trade levels of support. Now, if you go long at these levels here, then you want to use your stop, 1728 stop, basically for next week. It gives you a bird eyes view, so to speak, or a peek in terms of what we can expect next week to develop, and that seems to indicate that the markets, after confirming this major bottom in silver that took place on December 1st, and we have seen a similar correction here around the middle of December. We came down here to about the end of December, and we have been anticipating, as I said, this rally up to about the middle of January, and in fact January 21st seems to be the day where it made the top and the high of 1850, which we posted a high potential developing into that resistance area. And so it has eliminated some of the pressure of resistance on the upside. It has come down to ideally testing these levels of support and recommending that these are levels to enter and to buy the market in the silver market. And if you buy into this zone, use the 1728 as your level, as your stop for next week. The thing that I want to do is point out to what we're doing in addition to trading the futures markets. We are using the derivatives ETFs such as USLV in the silver market. For those aggressive traders that do trade volatility, and please be aware that these instruments like the futures markets and derivatives like ETFs like USLV are extremely volatile instruments and should be traded only by traders that can deal with this kind of volatility. In managing the risk, we feel that by taking a position overnight on ETFs, it eliminates the risk and the stress of managing a futures contract, particularly in precious metals, with regards to margin calls, with regards to basically any surprise that may develop overnight on the Globex. So we are using the ETF USLV and very much in the same timing pattern that we use the futures markets. We also produce a report. If you go to your subscription and you click on the weekly futures, stocks, and ETFs report, this will give you the same algorithms that you can apply for trading in the derivative markets, like we're trading in JNUG, USLV, Nugget, in the precious metals markets, and we are looking at RUT for the Russell 2000 and UCO for the energy markets as well. But let's take a look at the information in USLV. Excuse me. And basically, the contract, the ETF closing at 29.69, closing above the 9-day moving average of 22.72 is confirmation that the trend momentum was also bullish for the ETF coming into last Friday. Prior to that, obviously, we pretty much caught this move up here. And we've been trading from the long side. One thing that you need to know is that because of the time difference in trading the ETF, you can be subject to a lot of gaps, openings, based on what the futures markets do during the Globex trading sessions. So if the market opens lower on the Globex trading session, the ETF obviously is going to open lower and leave a gap. But we're finding that sometimes these gaps can provide tremendous buying opportunities. And that's basically what we're looking at in terms of what the algorithms are saying in identifying the highest probability trades to enter into this market. So the weekly price indicator, let me go back here for a minute. With the market closing above the weekly price momentum indicator of 29.14, obviously it's still confirmed that it was bullish, but it told you that if it closed below the weekly of 29.14, it would negate the bullish signal to neutral. And based on what's happening right now, basically it looks like it's being negated to neutral. The close below 22.72 using the last week's moving average is telling us that if it closes below there as well, the signal would be neutral. Not necessarily short, but it would be neutral. So we've basically are approaching, according to these algorithms, levels that indicate support as well, or possibly oversold conditions. With the Market closing below 29.14 here. Which took place on the 26th. It gave us an indication that the market could come down into the area of 27.78 to 25.82. We are trading at 23.21, which means the market's come down below these levels and it has picked up the buy signal at 27.78 and 25.82. And it's recommending to reverse and to go long and use the 25.82 as your stop level. So it's picked up now. The buy signals basically at these levels, and the stop that we're using for next week is 25.82. If we close below 25.82 next week, I would use that level if you want to as a hedge, or at your own risk to go short. We are looking once again for the market to find what appears to be major levels of support, as we feel that this action here potentially could be an island bottom formation that is taking place.